Right now, I want you to do something very simple. Just look at the time. Seriously, look at the clock. Because by the time you finish watching this video, we will be very close to something that could completely change how you see the silver market. And I'm not exaggerating when I say this. What you're being shown right now, the price you see on your screen, might not be the real price at all. And in a few hours, we're going to find out. Now, before you dismiss that, before you think this is just another dramatic claim, I want you to test it for yourself. Pause this video, open a new tab, go to any major bullion dealer website, doesn't matter which one, and try to buy silver at the spot price. Go ahead. Try it. Now come back, because I already know what you saw. Either the product was completely out of stock, or the price you saw was not even close to the spot price. Instead, it was higher. Much higher. $20 more? Sometimes even $30 more per ounce. So now ask yourself one simple question. If silver is really trading at that lower price, why is nobody willing to sell it to you at that price? Why is there this gap between what the screen says and what the real world is asking you to pay? Because that gap, that difference, is where the truth is hiding. There are actually two different markets operating at the same time, and most people don't even realize it. The first one is the paper market. This is where prices move on charts, where contracts are traded, where numbers go up and down every second. And this is the price you see on your phone, on financial news, on trading platforms. But then there's the second market, the physical market. This is the real world, where actual metal exists, where something has weight, density, and cannot just be created out of thin air. And right now, these two markets are not agreeing with each other, not even close. The paper market is telling you one story, but the physical market is telling you something completely different. And the people who actually deal with real metal, the dealers, are showing you that difference very clearly. They are either refusing to sell, or they are raising prices far above what the charts show. And they're not doing that randomly. They're doing it for a reason, because they understand something that most retail investors don't. Now think about how price normally works. In a fair market, price is where supply meets demand. Simple. If demand goes up, price goes up. If supply increases, price goes down. But what if the price you're seeing is not being set purely by supply and demand? What if something else is influencing it? Something bigger, something structural? Because what we've seen recently doesn't behave like a normal market. A few days ago, silver was trading around $80. Everything looked stable, nothing unusual, and then suddenly, the price drops. Fast, aggressive. Within a single day, it falls by more than $10. That's a massive move. And the question is, what actually caused it? Did the world suddenly stop needing silver? No. Did industries stop using it? No. Did mines suddenly produce more? No. So what changed? The only thing that changed was the price on paper. And that's important, because it suggests that the move didn't come from reality. It came from the system. Now let's go a little deeper, because this is where things start to get uncomfortable. The amount of silver that actually exists and the amount of silver that is being traded on paper are not the same, not even close. For every 1 ounce of real silver, there are multiple claims on it. 5, 6, sometimes even 7. Different contracts, different positions, all tied to the same underlying asset. Now imagine this. Imagine 7 people, all holding a receipt for the same single item. Everything seems fine until all 7 decide They want the item at the same time. That's when the problem starts. Because suddenly, there aren't enough resources to fulfill those claims. And that's exactly the kind of pressure that builds inside a system like this. Now, combine that with what's happening globally. Demand is not going down. If anything, it's increasing. Countries are accumulating metals. Industries are consuming more of it than ever before. Silver is being used in technology, in energy, in infrastructure. And unlike many other resources, once it's used, it doesn't easily come back into circulation. So you have a situation where supply is limited, demand is rising, and yet the price drops. Does that make sense? Or does it feel like something is off? Now let's go back to the dealers for a moment, because they are the closest thing we have to a real-time signal. They are not speculators. They are not guessing. They operate on margins, tight margins, and for them,